Okay, this is going to be the day traders versus weekly analysis, weekly outlook for the week of November the 5th, the November the 16th. We have some some earnings this week. We got the government back open. Um, and we have any one of these that I'll probably spend the night tonight looking at the plays for some option plays. I haven't had a chance to look yet, but we do got Nvidia on Wednesday. That's gonna be the biggest one for the week. Uh, we got some retail stocks. We got like Walmart and Target, Home Depot that we need to pay attention to. Um, Ross, Webull. Yeah, I'm gonna. I think I see a couple that I already wanna play. I'll put those in the chat once I get a chance to. As far as economic news we got this week coming up, let's take a look. We got we got news, a lot of news this week. Um, we got news on Monday. We got 8:30 news on Monday, Empire State Manufacturing, and we have Fed Speaker Waller speaking on Monday in the afternoon. Then on Tuesday, we don't have anything on Tuesday. We have FOMC minutes on Wednesday at 2. We have hourly earnings, non-farm employment change, unemployment rate on Thursday, and unemployment claims in existing home sales. So we have a lot as far as news on Thursday. So Thursday will probably be our most volatile day. Um, Thursday will probably be the day we want to be watching out for as far as the bigger moves, which actually works out for me because that means I won't be in the office on that day. So that um, then on Friday we have PMI, consumer sentiment, treasury reports. Never traded that too much, but PMI, that'll be one we want to pay attention to, the consumer sentiment. Probably expect that to be lower. But it looks like our big days are going to be Thursday and probably Friday. We have Thursday and Friday. And then we may have a big day on Wednesday too. Well, I won't say we may. We'll have a big day on Wednesday, Thursday, and Friday. Mainly because we have NVIDIA earnings on Wednesday. So and then we got Walmart on Thursday, and like I said, Home Depot. We mentioned this the last time we were on the call, the Fed rate, because they are not going to be releasing the data, and they don't know whether or not they're going to release the data. We had a huge shift in whether or not we probably get a interest rate change. We've gone from, we were at 90% before they mentioned that. We dropped down to about 50-50 last week. And now you can see that it's 55 to 44, almost 60-40 that we don't get a change to the rate. So, which is fine. But that we'll have to see how that plays out.
Okay, Corey, let me ask you a quick question. Go back to that screen you just on.
Yeah,
Okay, so what is this telling us exactly?
the probability that we get a rate change, right? Right now we're sitting at 400, which or 4.0, and the next drop is usually they do a 25-point drop. So from 400 to 375 or 3.5 is what they were expecting at first, where we get a 3.5, 3.75 drop. So we would be moving from current interest rate of 4% down to 3.75% if they do the drop.
This
But
is national rate average.
yeah, the Federal Reserve interest rates. And what happens is when the Feds drops their rate, home prices drop. I mean, home interest rate drop, car interest rate drop, all the borrowing requirements drop as well. Like so, not only do your interest rate drops, but the score you need to get borrow money drops as well. So
Okay.
like where you where you were getting 7% interest rate, you'll get 6% interest rate. And where you needed 675, you may need 650, to get
Okay.
approved for a rate. So that's and same thing with a car loan, same thing when you for business credit, the business credit interest rate drop, home interest rates drops, any kind of borrowing requirements are lowered as well.
Mm. Oh,
Yeah,
okay. I can see how that can be
yeah,
important news. Yeah,
yeah.
because
So
most companies they borrow for the against the company for their payroll, right? Some similar to that. Most large companies, anyway,
cases,
they
okay.
borrow money to cut to get their payroll out.
Um, I would like to believe they shouldn't have to be doing that if they're a larger company. They shouldn't borrow money to make payroll. If it's a company that's borrowing money to make payroll, that means that they might not making no revenue at that point.
Mm. Okay. All
Their
right.
revenue should cover that, and their revenue, and that should be included in their uh, operating costs.
Yeah. Okay. All right.
So that shouldn't be something that we need to worry about with that. But this basically, if we had a gotten a rate cut, meaning we would have went down 25 basis points or 0.25%, we would have been looking at potential you know, borrowing requirements lowered so that way they can try to infuse more money into the economy. That's basically what they do with that.
Okay.
So they lower the rate so they can get people to spend more money. That's pretty much what it is. And it was they were hoping for it because if they cut the rate now, it lines up with like Christmas and holiday spending. So that way they could infuse more money into the economy. But if they don't cut the rate, then you know it it limits to some people the extent to an extent of how much they have to spend, and if they spend more than they likely would, you know.
Okay. Yeah, that makes sense.
Um, okay. So we'll go ahead and jump on the charts. So we have dollar right here. We left a weekly high here with equal highs for the week right near the monthly. The weekly opening here, we got another high near the weekly open from last week. And then we took out previous week low and we set a new low for last week, right? So right now, we did come off of those lows, right? We got this fair value gap here on the 1 hour but that's sitting right in between this inverted fair value gap. So for now, I'm going to assume that we got right now the most obvious target is this high right here from the previous day from Friday that we take out, push up, take out that high. And then we look to see if we go ahead and aim for this high. If we take off everything on the chart and look at the daily, you can see right now we trying to reject this area right here and we kind of pushing up. So we'll likely we're in like a 50-50 area. So we in a place where we could go take out this high or we could go take out this low. But since we've seen some rejection near this low, right around 99.132. I would be looking to see if we actually try to start looking for buys around that area, right? And mainly because that 99.132 area also lines up with like a lower time frame fair value gap too. And we since we closed inside of this inverted fair value gap, and we kind of holding, I would like to see how we react to that if we drop down. But if we do sell off, we need to see price take out these lows, and then we can see a sell if we push back up, and then we can start looking to go for these lower, this previous day low. There's some some highs that I want to see us go ahead and trade through. This one from Thursday in particular, that's the main one that I would want to see us, and then I would want to see us come and take out these previous the previous week high and all of this liquidity right here. If we do manage to get above there, this old new day opening gap is where we'll target, but we'll deal with that if we go ahead and take out these highs. So let me send you this on dollar. Good old dollar. Yep, they about to lose, man. Yeah, they about to lose.
Typical.
Yep. All right. So here's our goal set up. Now, gold, I actually want to see this push up too, but that would mean that dollar is selling off. But the reason why I want to see that this pushes up is because we left all of this imbalance right here on this move down. I would like to see us push up into that area slightly to try to see if we get something that looks like this, where we push up and then we sell off from here, or even up here, we sell off from here. But I want to see us push up first into that. And the reason being is because this low is coming off of a significant area, and we already taken liquidity here and here and here. So since we've already taken liquidity, maybe we have a rundown, maybe, and then we push up. So that's going to be one look as well. But overall, I want to see us, since we already started to hold these lows down here, I want to see us go ahead and start pushing up on the open. If we push up in the open, either we're going to push up and continue up, or we will push up and then start to sell off at one of these price points. And when we look at the daily, you'll see why I'm saying that for the buy. Look at the daily. So on the daily, you can see we got this fair value gap right here, and we selling down into it. Usually we probably need to push down a little bit if we're going to hold this. So we could hold inside of this wick right here, where we could see some buying around 40.68. But I would like to actually see this push up and then see if we're going to hold inside of that, hold inside of this gap. And then there's also a fair value gap right here as well. So that's what I'll be looking for. Let me see what these fools done did. Yeah, so and then oh,
What time limit you was on at first quarter?
huh? Was that
You say you on a daily now. What was you on at first?
the 1 hour?
Okay.
Yeah, I was on the 1 hour chart. So since this rejection is happening inside of a fair value gap, I'm okay with seeing us push up some. So, but then the question is, do we stay inside of this candle and try to sell off inside of this candle, or do we go ahead and push up, try to take out this high on the daily, and then further into this order block right here? And if we go to the 1 hour, you'll kind of see why I got this set up like this, right? So like we said, we have price pushing up into this 4-hour fair value gap. If we push up in here, what we'll need to do is trade inside, hold inside, and then push up higher if we're going to go higher. If we get in here and we start to see people selling off, then if we start to see sell off, and if we start to see sell off around here, that's when we can take our sales from here or in here inside of this daily fair value gap. So, and then if we do, we're going to target this previous day low, or this will probably become a swing low, and we can target there as well. So if we get into this trade, this low will be our main target, and then the next low is this target right here. And if we just keep dumping, there's some more targets down here, but we'll have to worry about those as they come about. So let me give you guys gold. I think they just lost. I think Falcons just lost. I think they just lost by a field goal. They took it to overtime, and I think they lost by a field goal. But again, who thought any different? Who thought any different? You know. Where you guys at? You guys at the house or y'all out and about?
Yeah, I'm at the house right now, but they lost 30-27.
Yeah, I'm at the house right here on this computer.
Oh, okay.
Yeah. I'm about to get ready to go to I gotta go to my uncle's house right quick. Spray around his house before I go to work.
What uncle?
My Uncle James on my daddy's side.
Oh,
Stay over
okay.
there in Pittsburgh.
Oh, okay. Okay. Right. What uncle you got there? I don't know.
Yeah.
Quit writing on my thing, Raji. Okay, this goal.
3-6. God, sorry about that. Yeah.
It's all good. 3-6, man.
It's all good.
Whole year is over, and that put us like down in the division. So
We at the bottom of the division, eh?
the
Yeah.
bottom.
We should be at the bottom of the division.
Well, no, New Orleans, the only people who got it worse than us.
Oh yeah, that's right. Yeah. 2-8.
Yeah, forget about them.
After next week, hell,
Yeah,
that might be 3.
yeah, true, true. All right, let's look at the daily.
You know.
This is Dow Jones, right? So we sold off from here. We took out this candle, we took out this candle, and we took out this candle, right? But now we're starting to get a little rejection. So the question is, at this point is, are we going to hold here to push up from here, or does this sell off continue, right? And if the sell off continue, we should see something like either we just go ahead and push on down to take out these two lows right here and right here, or we could also see something like we push up into this area, then we sell off, and it's the same thing. We take this out or we take this out, right? That's pretty much the scenario for the sales right there. Either we go ahead and we sell off, or we push up into this range right here somewhere, and then we sell off. Now, if we're looking at the buy, right, What we would have to do to go bullish again is we need to take out this high right here. And then once we take out this high, that same range we looking to sell at, we need to see price stay inside of there and then push up. And then we look for that high. And then there's a couple of highs in between here as well. But for the buy, we need to see price push up, hang in here, hold in here, and then continue. We could also see something where we get both setups where we come in here and we start to push down, but then we push down and we buy from somewhere down here. And we'll know which one we get once we start to see the price show us this hand, right? Once we see everything kind of giving us a bias, we can take what we already know on the chart where we got our fair value gap to the downside right here, and we got an inverted one right here, and we overlapping, right? So once we got an overlap, we know that probably around this area right here, halfway point is where we're gonna get most of the volume to trade. And if they decided they want to continue to buy, this will probably be around the areas that we want to look for the buy from. So here is the buy setup and the sell setups for now. So this on the 1 hour. If we open up, like I said, if we open up, we can start to look for buys once we take out this swing high right here. And if we take out this swing high, right, this swing high is not a previous day high, but it's an important liquidity area because it's the last high that was made before the market closed on Friday, and it's the high that kept us from being bearish for the week. So once we take this out, we need to see a fair value gap through this high, and then we can at least look to trade up until about the midpoint of this daily fair value gap, at least around 47,832. If we do keep selling off, we need to take out this low. We should see a fair value gap through this previous week low, and then we can look for price to come below it, trade back into it, and then we can look to sell to take out this. Once we take out this previous week low, we can start aiming for this previous week low. But just understand, if we get inside of this area right here, near this low, we can see some buying here, and we can also see if we do take out this previous low, there's an inverted fair value gap here as well. We can also see buying into this where we can see buying, but right around 46,500 to 46,291 area. If we get inside of this, which I probably need to adjust this a little bit, but I'm gonna leave it for now. If we get inside of this and we start to see price hold around 47.60, 47.647, if we start to hold here, that can also be another catalyst to buy. That's what this move is from here to here will represent. So let me go ahead and send you this. And again, we could also see the sell-off inside of this range as well. That's where that down move will come from.
So, hey, Corey.
Yep.
So I'm looking at your notes over here to the right. Did you you putting all those notes in the
Yeah.
chat too? Okay.
Yep. Put them in chat.
All right.
Yep. I will put them in the chat. I will I'm gonna start doing that, but it just means it'll take me a little longer.
Yeah, I started using that notes feature. That's pretty convenient.
Yeah, yeah. Keep everything together. Okay, this is Dow. Now we're gonna go to NQ. Similar look. We start on the daily. Similar look as well, right? We made a fair value gap right here. We have inverted fair value gap, and we have one right here too, but we don't need to deal with that. And the same question got to be answered. Like if we're gonna sell off, right? We're gonna keep selling off. It's gonna happen one or two ways. It's gonna happen inside of this range. Once we get in here from the opening, we push up, we sell off, we try to target these lows right here. Or we open, we come inside of this range, we can't sell off, and then we hold inside of here and we push up from there. And then that's when we want to target these highs right here as our take profits. And then you can see there's another area where we could also sell from right here because there's a small fair value gap. And then we could look to sell from there. Not really addressing this one yet because if it does happen, it'll be after probably like Wednesday. If that happens, if we get up here, this will probably be Wednesday's high because of NVIDIA, because that'll be our first real catalyst to drive us up to this point. So I'm not gonna worry about that. And if it does happen before that, you know what I would be looking for. So I would take if you know that's what I would look for, then I want you to do the same thing, right? So now we can drop down to the 1 hour. And this pretty much lining up with what I was saying before. There is a small inverted fair value gap. That's the one I want to know if we gonna how we gonna deal with. So for the sell setups, the first setup off the open is if we come down into this inverted fair value gap, which we have used to buy from. So if this is also a buy area and it's a sell area as well. So we buy from here if we push down and hold right above 2487. I'm sorry, 24,872. I'm sorry, geez, I can't see it. So if we open on the open, if we push down into this area and we start to see price holding around 24,827.25, then we can look for this area to buy, but wait for a confirmation, right? If we if you don't take that buy and you start to see us closing below that, you can wait until we close below and come back into it and then sell from there. And then you just be looking for fair value gaps to sell off of, and you want to take and try to aim for this previous week low, and then even down into this daily price gap right here, which the price gap starts at 24,482.25. We could also see some buying around this level right here, which is 24,711.50. That's a small 1 hour fair value gap. The reason why that was important, and I'll show you why that one's kind of standing out too, is because it started this leg up right here to get to the last all-time high. So that's why we are still considering that. And then there are previous week lows here too. Let me go ahead and pull this over here too. Just put this on the right. So you'll know. Also is previous week lows over here and equal lows over here too. So that would be the next target to the downside, right? The other thing we would be looking for is if we open up and we buy, we open up and buy, we'll need to see price take out this previous day high. And if we take out this previous day high, we need to see a fair value gap through that. And then we would want to start seeing price hold around this fair value gap from the daily from around the low at 25,370.50. For now, up to 25,566.00, which is the middle of that fair value gap. And then once we get in between this range right here, we can also see potential selling right here, or right around the midway point. So I would like to see how we handle these as well. And either we push up and we just hold and keep going, or we push up and we come in here and we try to sell off. And then we got our original sell set up, right? We have the previous week low. We took out last week's low, but we traded back inside of the range. So that's why you kind of got to lean bullish when you see stuff like that, or at least be on a 50-50, right? Because now we at right around from this high to this low, from the previous week high to the previous week low, we almost 50% of the range. So that's kind of why we want to look at that, right? And let me send you another, let me get another screenshot of this, and I'll send you all the notes. This one is a little too long. It's not letting me send it. So let me see something. Anything I can cut out over here. Not so far. Okay, so let me just do half of it. It's still too long. All right, give me 1 second. It's a little too long, so I'm gonna just like try to break it down into split it up. Okay. So that's the buy. It's the sell. Still too long. Three. Let me see anything I can take off of here. Got it. Okay. All right. And now here is the chart. Okay. So that's NAS. And now save that. And now we get our ES, S&P. And then let me check something else. Nope. Okay. Yeah, I'm good. Okay. All right. On the daily, similar situation like we mentioned before. This is the low we just made. That's our downside targets. And just for some reason, if we get down to those, these would be too. Then we got our fair value gap to the downside, right? This gap right here. So the question is going to be, do we hold, push up and hold inside of here to go higher, to take out this high? Or do we push up inside of here to sell off to take all these lows? Or do we just open up and start to sell off and take out these lows? If we do sell off from here on the open, we could see buys around here, and we could even see buys around here. There's some things on the lower time frame, and you can see right here, there's a gap right here that we could be coming down into, and then this is an order block right here that may or may not get used. So that's why I'm looking at potential buying from here. But then the main thing is we could open up and push up into this range. Now, if we open up and push up into this range, you see we got an inverted fair value gap right here. We got another fair value gap that's right here. And we got overlap that happens from right here to right here. So if we come up in here, we can look for some selling around here. And worst case scenario up here, 1, 2 would be our sell setups. But if we get in here and we start seeing price hold, that's where you have something that look like this come into play. We hold, and then we start pushing higher. And then we aim for that high, and we aim for that high. You'll see all of this on the 1 hour. We look at the 1 hour chart. And that's basically the same scenario, right? Where if we sell off, we go ahead and push through. There's a little small inverted fair value gap right here too. I just extended the other one that we used last week because it's overlapping the same area. But if we do, we push down and trade through it, then we could see possibly a sell from that to take us lower. And then we would target this low, and for sure. And then if we can get down to this previous week low, we need to see fair value gaps through this to set up our trades from to continue. But that'll be the sell setup. The other sell setup, like I said, if we push up into that overlap area where we have the crossing of the inverted fair value gap and the daily fair value gap that we had, and I just want to use this one right here, this inverted fair value gap, because it lines up with the daily one. We have some selling where we can see sales around 6811.00 all the way up to 6836.50. That's another sell area right there. But if we get, that's for the sell, right? But for the buy, if we get down into this fair value gap that's inverted from the 4 hour, we could also see some buying kick in around 6716.50. And if we sweep these lows and we have a catalyst and confirmation around these lows, we could also see some buying around these previous week lows. But that would be after we got the sale set up and we see confirmation, or there's a catalyst down at one of these areas at the same time to see a buy from there. The other buy is on the open. If we go ahead and take out this swing high right here that we made, that's a previous day high. Now, if we go ahead and take out this previous day high, and we start to see a fair value gap through that high, and we see that fair value gap respected, we can start looking for buys above that high and then continue to go further up into this daily fair value gap. And you'll see some support around 6795.50, particularly up to 6823.75, right? But just remember, you're buying into a sell zone, right? So that's the reason for that setup, right? But overall, we're gonna be looking for, if we buying, we pushing up, we coming and holding inside of this range to go higher to take out these highs for sure. If this buy triggers, this is just going to be the same situation, but just on a longer term perspective, right? So the main thing though is we want to look for our buy or our sell setup to happen roughly around whether this high is made right here, or if we open up to sell off immediately. That's the main thing.
So, Corey,
Yep.
that that's at the top of the what's that the hourly fair value gap?
This
No, that sell off, that sell, that
right
short.
here,
Yeah, that's the top of that. That's an hourly fair value gap, right?
daily.
That's a daily fair value gap.
Yeah. D minus FVG. That's daily.
Okay, all right, cool. And this is the daily fair value gap from Friday, right?
Mm-hmm.
Okay.
Yep. 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 It's the one from Friday. And then let me send you S&P. And the reason why that was important is because it's the one that made the last low and it took out a swing low. So that's the one we want to pay attention to.
So that wouldn't be considered. It didn't sweep liquidity, right? It just
Yeah,
gap lower.
it did sweep liquidity.
It did. Okay.
Yeah. It took out liquidity from let me pull up last week's chart. Um give me a second. Let me get rid of this and let me see, when I send you the chart, I'll show you the liquidity that it took out. And it did pretty much exactly what we predicted. Um, just did it in a different way, you know. Did pretty much exactly what we thought it would do. So last week's chart was last Wednesday when we did the midweek, right? This was what we were looking for. On Wednesday, we pretty much said that this liquidity right here that was just sitting, either we were going to trade up above the high, hold, and continue to push higher. These those same highs we looking to target now, because the price left this high. We left this high alone. We never took out this high because we ended up pushing down, pushing back up, and selling off all the way down to this area down here. So this whole setup from this area happened, and then this setup ended up happening to push to the downside. And that's why you see that we looking for who take liquidity. Because if we took liquidity on the high side, then we could be saying like, okay, unless we got something above here in this area that's like a fair value gap or order block, then that's the only way we would look for new sales, right? If we come in through this, we take this liquidity out and we put a fair value gap through these highs, then that would give you the scenario to look to do something like this, where you would see that the highs over here got taken out, and then there should be a fair value gap inside here, and we take our sell, or I mean, take our buy from here in this area, from something from, and it'll look like this. But instead, we took out all of this liquidity. We created a fair value gap, We set a low. So now we're looking for price to come back into it and then continue to sell off. And then we target this low. And if we look at what happened on the chart, you see all of that liquidity was right here. We sold off, we took it. I actually took the sell from here. We made this low. We tried to push back up. We couldn't even make it back up. And then we went ahead and set this low. So now it's kind of like we sitting at to see if this leg gonna happen right here from last week. Because it's still in the same area where this dang, I keep closing it out. So we've already went down to make this low. We already went down to make this low. We pushed down all the way right here without coming back into, now there's a fair value gap. That's that daily fair value gap around here. So now price is pretty much down here. It pushed up, pushed up. So now it's sitting like right around here and it's holding, right? And now that it's holding, it's like, do we take this high out right here, or do we take this low out down here that we just made? If we take this high out right here, that means we trade into this fair value gap. And that's why I say if we get in here, we can see a sell-off inside of here, because now that area is like susceptible to for sales. But if we get in here and we start to see price hold sideways and it's just not doing nothing, that's more of a probability that they just, every time somebody try to sell from there, they buy it back up. And then eventually they're gonna move it up from there to go get these highs right here. So that's what we're looking for. That's what this looks. That's what this represents.
Yeah. Good look. Yeah. I can see it.
And it's not predictive.
So Corey, when it's holding like that, and when it's holding in one spot going sideways, do we wait on a liquidity sweep before we make a move, or
That's the
what?
thing to do. Yep, that is the best thing to do. Like when I got a situation like this, you don't know which direction is gonna go, right? And if it's not like, if it's like a level of liquidity that is just on the lower time frame or something like that, then you just don't know, right? So you just want to let it play out so that way you can get a better confirmation.
So let me ask you this right quick, Cuz. Um, when you took your sale on that from what's that monthly high when it started to go down,
Uh-huh.
where was your exit point? Did you ride it all the way down to the
Uh,
bottom?
Hold on. Let me drop this trade in there.
Okay.
Let me drop this in there and I'll show you that trade.
Okay. I think I see where you might have entered that. That's right when it broke through that hourly fair value gap.
I'm gonna show you.
Hmm.
I'm gonna show you. Hold on. Let me drop this. Let me just finish dropping this in here. So that was on Thursday.
Hmm.
This. So the trade was on Thursday. Thursday was the 13th. And on the 1 hour, you see this right here?
Hmm. That's not an inverted fair gap. That's a regular fair
Yeah.
value gap, right?
It's the regular one, if we're looking at it right now.
Okay.
Once we traded into this, right?
Mm-hmm.
Right now, if we looking at it from that particular day, and let's do a replay. This fair value gap took out this high. So we know it's valid, right?
Okay.
At this point, it's still bullish, right?
Yeah.
It's still bullish. If we just keep going, right now, we getting a reaction off of it. That's where this low coming from.
So that's the first level of support, right? In the middle of that fair value
First,
gap.
exactly. That's the first attempt for us to continue to use this to go higher. So once
Okay.
you see this right here, once you see this right here, right?
Uh-huh.
This is the fair value gap right here. You see this setup right here is an attempt for us to use it to go ahead and target the next high, which is this one. And then we got this one. So if once we see this right here, you should be thinking that, oh, it's going to go ahead and keep going, right? What happens is when we when we go ahead and push everything forward, keep going a little forward, we come back into it again, all right, over here, and we try to take out the high, but we don't. We just leave it. So that's two times that we traded inside of here and we didn't go higher, right?
Oh yeah. Okay.
So
So
that's
that's a strong signal that the market is about to be a changing trend, right?
exactly. So now, again, we keep going forward, and this all happening overnight. Now, over here, this candle right here,
It broke through the support level,
this candle right here, it took out these lows right here. And at the same time,
took out the fair value gap.
the next candle took out the fair value gap, right?
Yeah.
So this right here is a signal like, hey, this probably gonna go, right? And now you're looking for the trade to take out this low and this low and this low. We're right here. And now you know that this is in now once you know this is inverted, you just look for the next candle that gets you a next setup that gets you an entry off of this level, right? So the trade end up for me being here on the 13th, where I already had accounted for the fact that there was a fair value gap that got inverted on the 1 hour, right?
Mm-hmm.
Now, all of this, unfortunately, all of this stuff right here where I could have got in higher
Mm-hmm.
or up here, that all happened before this happened after hours. So I didn't see this happen. And then this move right here, this happened at 4 a.m. I probably could have got in once we start doing it right here, right?
Mm-hmm.
Didn't get a chance to get in any of those, right? This is around 4 a.m. So to take there's a small fair value gap set up right here. I could have took it, right? Once I saw that this low was made, I could have looked for a price to come into out of this fair value gap right here. Because we essentially repeated it over here on the lower time frame where we inverted it right here, came back up in, and we started selling off on the lower time frame. But this happened at you would have had to been trading at 4 a.m. to get this, right?
Mm-hmm.
And then this high was the last high we made for before the market opened. But we just started climbing down through it and climbing down through it, climbing down through it. We never really swung back up into this range, right?
Mm-hmm.
So the way you'll look at that is, once you see all your confirmations, where's the next setup can come from? It'll have to come from off of the low of this, right?
Mm-hmm.
And since we already traded much further below and the market already pushing down low, this is before market open. So you still waiting, right? And so right when the market opened, which was right around here, which is like 9:30 around here, that's when this low happened. And then we start to push up. We got a fair value gap to the downside. And we also got this inverted fair value gap. Now all you're doing is waiting for the candles to tell you when it's ready to go. You see the candle reject up here, and it's
Mm-hmm.
rejecting at an area where you know it's supposed to be rejecting in, and you get a candle to close below, you take the entry from here inside of this range. And you good to take a sell at that point anywhere inside of this range at these three levels. Your first target is here. That lines up with one of the lows that's over there. Your next target is down here. That lines up with one of the lows that we found before. And then you can even hold it below because there was also a low that lined up somewhere around here. And that's where you would target all the way down here.
Okay. So when we see the setup happening, right?
Mhm.
What would be the best time frame to look for the entry on?
It depends. So if you see the setup happen on a 1 hour chart, right?
It depends on the bars, don't it?
The
The
candles, yeah,
the
yeah.
candlesticks.
hmm It depends on the candles, right? So a rule of thumb is if you see a daily setup, go to the 1 hour or the 4 hour to get your candlestick set up, right? If you on the 4 hour, go to the 1 hour or the 15 minute to get your setup. If you on the 1 hour, go to the 15 minute or the 5 minute to get your setup. If you see that that's still not giving you exactly what you want to look for, stay on the 1 hour chart, but watch the chart on the 5 minute and the 1 minute chart. And then you just look for the same exact thing on those lower time frames,
Okay.
right? So my setup on Thursday was based off of a 1 hour chart setup, but I used the 5 minute and the 1 minute to get the entry off of it because that one gave me the earliest confirmation to what I was seeing on the 1 hour.
Gotcha. Okay.
So
Yeah, Corey, when you do the one, I mean the one. Say for instance, you in the 1 hour and you looking at the 5 minute and the 15 minute chart. It's gonna give you the same thing, but it's like on the daily, you can hold that for a long time, but that's on like day trading and stuff like that, right? You don't hold that long when you go down that low, when you go down that low, right?
if the setup calls for it,
Okay.
call for it, you hold how you hold. If
Right,
it's
right, right.
and it's going to your targets, that's where you target because you got the initial setup off of a certain time frame, right?
Right, exactly.
And that's what you want to stick with, right? If you need to cut it and until it tell you to do something otherwise, then you don't really worry about that.
Oh, okay, okay. It don't matter what time frame until you get the confirmation from the candlestick.
hmm And
Okay, I got you.
same setup from this is the same setup, right? And I
Mm,
was gonna give y'all this to study too, because I really, really like how this played out. So this one was ES, and this one was NQ. This one's ES right here. And some things that I wanted to kind of point out on this setup from ES, right? This is exactly how the charts look, but without all the candles, right? This is the same setup. We had all-time high over here. We had a previous day high right here. We had the current week high over here. Then we had liquidity over here, right? We had an order block that was made already. We had an inverted fair value gap down here. And we had an order block that was made to the upside over here. We got that order block confirmed once we took out this high, and then we took out the low of that and started to push down, right? We got early confirmation when we inverted this fair value gap right here. That early confirmation inverted, and now we know we can use that to go ahead and target these lows, where we had these lows that were right here as targets initially, and then that one low that was over here as an additional target, right? So every time I'm telling you, like, this is a target right here, this is a target right here, there was one right here, and then there was one inside of here. And then we can actually use all of this as a target as well. The new week opening gap, and we can use the levels from this fair value gap as targets as well. Even though there's not liquidity, because price either gonna go to liquidity, or it's gonna go to an imbalance, or it's gonna go to an order block, or it's gonna go to something that's in the opposite of what we were just doing, right? So we made our we made our high, and then once we made our high, we set a low, and we set a short-term high, and then the next phase was to go ahead and target this in this move down right here, right? Then once we made this move down right here, we set a new low, right? Then after we set this low, we set these short-term highs, which you can see on the lower time frame. That's what this orange line represent. We made a couple more short-term lows and short-term highs, right? Then what did it do from here? It made this move down and it target this low, right? Once we target this low, we took out that low and we made a new low. We made another short-term high here that lined up with this high here. So we had these highs, right? Then once we made these short-term highs right here, we set this low as a target, and then we took out that low, and we took out liquidity from a higher time frame over here somewhere, and we made an order block. This order block and sweeping this higher time frame low implies that now we are at an area that we can see price move in the opposite direction. We know that because this order block has a fair value gap inside of it, right? This fair value gap, we're not going to consider this blue move yet, but once we make this fair value gap, we should have been looking for sales here if we were going to keep going low. Because just like we did over here, now we got a low to target. This low should push up into this fair value gap and sell off. And now we targeting this low, and then we would be looking for another short-term high to go ahead and target that low if we were still going to keep going lower, right? But instead of it continuing, we inverted it, meaning we traded through it. We got a close above it. We traded through it, and we kept going higher. And then once we kept going higher, we left a fair value gap to the upside that replaced this one that's now supposed to be selling off. We replaced it with a bullish one. Now that we replaced it, right, with the bullish one, that's a sign that it's time that we could be going up higher, right? So now, you know, now that we could be going up higher, we start to see that, oh, okay, we're not coming back into this range yet. We're leaving it open. Because right now we just took out this high, we took out this high, we took out these highs, and we haven't come back into the range, which is all it is right here. All it is the range that once we made this low, if we were going to sell off, we should have sold off right here, right? Then there's another area right here. There's another smaller fair value gap right here. If we were going to sell off, it should happen right here. Then there's another fair value gap in here somewhere. If it was going to sell off, it should have sold off right here. And it never did any of those times, right? We don't get confirmation that it's ready to do that until after we take out these highs. We set this high right here. And then after we set this high, we take out that high and we set this high right here. But we don't take out this high, right? And when we after we decide the price show us that it's not taking out this high, we get the order block right here. If we're going to take out this high to go ahead and target the high we made right here, there should be price coming down into here, holding, and then pushing up to take out that. But instead, on the lower time frame, this is the orange move. We come down, trade through the area we're supposed to be buying from right here. We trade through that, and then we make our new lows, right? And that's kind of like the playbook right there, right? You're looking for where does the market tell you that is ready to turn around in a different direction. And if you bullish, then you want to see that the selling come into an area where it should be turning around at, right? If you're bullish. So now this area is now an area where it should be turning around from. And the only way you don't take a buy from here is if you see this price get traded through and we have a new fair value gap that we can see price trade through it, push up, and sell off from there. Because all you doing is essentially you trading from, in a bullish market, you trading from something that's bullish to something that's bearish. And once you get to something that's bearish, you either going to trade through it or you're going to sell off from there. And if you sell off from there and you still bullish, then you're just saying, like, where was the last bullish thing, right? So like I said, if you bearish during this time frame right here, right, you're saying at this point, I'm bearish from here, right? So now I'm saying I'm gonna sell until I get to a bullish point. That bullish point is here because at this point, there's something over here somewhere to the left that's bullish. Oops. There's something over here to the left that's bullish. But from here to here, you're bearish. And now, once you start to see, okay, all right, I've sold off from here. I've reacted to something bullish. So now this short-term lower time frame, you're bullish, right? But again, what are we doing? We just left something bullish. We need to go to something bearish, right? So likely what's here is a fair value gap, right? That fair value gap is bearish. So there's likely a fair value gap or order block or something right along as to why we made this high, right? So we go from bullish to a bearish point of interest. And either we sell off from there or we trade through it to take out this high. We're going to sell off or we're going to buy from that area, right? And
Corey,
yeah,
sorry to cut you off, but when you sell through it, the counter's gonna tell you which way to go, right? So right there where you say it's bullish at, that counter that take out that line, you looking for a single counter that go from there to there, right? They
Not
take
a
out that
single,
line.
it'll be a combination.
It'll be a combination or a single. Okay.
Yep. It'll be some formation that confirms like, hey, this is probably gonna buy short term from here
Mm-hmm.
until I get to the bearish point of interest, which is up here. And once I get here, I'm waiting to see what bearish signal I get up here that lines up with me being at this bearish point of interest to give me the confirmation to take the sell from here so I can take out this low and sell
Mm-hmm.
down here to make a new low.
Right. Okay.
And it's really that's really the repeating cycle all the time. Like if you can understand that simply, like that's really like the repeating cycle because this is the same thing that I just showed y'all.
Mm-hmm.
Same thing, right? There go the high right here. This is the lows that it made right here, right? And you see, it might not be just one low, right? Because once we got down here, if we look to the right, why is it buying? Remember what I told you? It's something to the right. I mean, something to the left that's going to make it buy, right? This gap is why it tried to buy, right? So now it got to the gap. It's trying to buy, but it doesn't take out this high. It actually come into this a fair value gap right here and it make a high right here. You
Right.
get set up right here. You sell from here. It's a couple attempts that you could have taken inside of this high and this high where you could have sold from here. And then you would have been saying, all right, if I'm selling from here or here, I know I can target. If I'm selling um, from here or here, there's a fair value gap that's right here. Remember I said there's a bearish point of interest. That's what that is right here. And it's an order block all right here. There's another fair value gap right here and an order block right here. There's another order block right here and a fair value gap right here. You use those on a lower time frame to get your entry. And then this is the lows that we made over here that's already tried to trade from a bullish point of interest. So high to low, sell off. We target these highs. We can't take them out. This is the main high. We can't take it out. Now we just dump, right? And then that's where you're saying, all right, cool. We tried to buy here. We went to our bearish point of interest here. Now I know I can target these lows right here. And from here to here, where do we get the new low? We tried to make one here. We tried to make one here. This sets the low right here.
Mm-hmm.
And now what do? We went from bearish point of interest up here. We have our bearish point of interest up here to now we got a bullish point of interest right here. This inverted fair value gap, which is exactly where price stopped. So now we in a bullish point of interest. Now we got to repeat the cycle. All right. If I'm if I'm gonna buy, you know, if I'm gonna buy, I'm asking myself, all right, cool. I have a buy. I know I need to go to a bearish setup, right? This whole area, you don't see it, but it's a fair value gap to the downside. And you don't see it because I'm not on the chart that's presenting the best view. But just trust me when I say this is the next bearish point of interest.
And Corey, that's more likely because it's on a higher time frame, right?
Exactly. This is what the higher time frame fair value gap look like. But if we go to the higher time frame, this is just one candle right here, just one candle right here. And so now that we've gotten to our bullish point of interest, we need to go to our next our higher time frame bearish point of interest. So why do you think we making highs right here? Is because we done got to this bearish point of entry and we operating from the middle, high, or the low, right? So now we inside of this, right? We seeing, okay, cool. We at this bearish point of interest. We see our first attempt that we could take, which in this particular case, you probably not taking this sell because this later on in the day, this look like it happened around 1 or 2 or maybe in the afternoon. Um, and you probably actually would have been looking for the buy because the buy actually gave you a better setup during the day, right? But if you had have been looking at this at a different time, like this happened at 9 a.m. right here around 9 a.m. This would have been the sell setup to target this low right here, where you looking at this high already reacting, you looking at these highs already reacting. You have a fair value gap on a lower time frame right here is reacting off of. We already went from higher time frame bearish, lower time frame bullish down here, where this was your bullish point of interest right here. You reacted to it. So now on the lower time frame, you've gone from higher to lower time frame. You are bouncing off of the lower time frame stuff to get to the higher time frame. And then now your lower time frame is telling you, hey, you got a fair value gap here you could be trading off of. If we don't take out this high and we don't get to the top of this higher time frame fair value gap, we probably selling from the middle of the higher time. We probably selling from the middle of the higher time frame fair value gap. And that's what we end up doing. And then it repeats like same clockwork, right? We repeat it. Now that we selling from here, this is our targeted low right here. And now once we start to sell and we take out this low, now we're saying, all right, cool. Where do we get our new low? We get a small temporary low right here that doesn't really give us a swing high, and we just keep dropping, right? And we drop until we take out another bullish point of interest and more liquidity right here. This is important liquidity because it's a previous week low. And then this is a inverted fair value gap. So now we add another bullish point of interest and we took out liquidity. So now we can start saying, hey, this is now a potential area where we can see price push up, right? Because on the 4 hour, there's a fair value gap to the downside right here. And if we were going to go lower, this low would be our target right here. And we would be pushing up to around here and then selling off to get this target. But instead, on this candle right here, we closed above it and we pushed up off of it, right? That make this an order block, one that we want to use. And now we know we can look for reversals around this area to go if we ever come back into this area. That's why we pushing up off of this area right now. And we just need to kind of see where it's going to go. But
so Corey, what's that previous week low? It didn't break the what's that a weekly low? Where this fair value gap right there where your pencil at. That's a previous week low, right?
Mhm.
And over to the right, it created a new previous week low, right? But it didn't break through to take that low out.
Well, It's yes and no. Yes, you're right. You're right. But that doesn't necessarily play into what's going on over here yet.
Okay.
Because what's going on over here, if we really looking at it, like none of this has happened over here yet. So I'm just looking at, right, we just dealing with this part right here first, right? Because now this is our weekly low. And in this week, we still saying like, all right, are we gonna actually push up from here? Because again, we just went from bearish to take liquidity, to set liquidity, to take liquidity, to set liquidity below these lows. And now from here, we've also reached a bullish point of interest. And now we need to find our next run from here. Where is the next bullish area, right? And that's what this leg represents, right? This is us going from bullish to next bearish, right? And this is how you kind of look at things, right? This was our bearish area right here, right? And so we went from bullish till we finally got to bearish, right? This area, we tried to sell from the low of the fair value gap. This area, we tried to sell from the middle of the fair value gap. Again, just like we tried to right here, we sold from the middle, right? We sold from the middle. We end up selling off from the low. We tried to sell from the low, but did we take out liquidity on any of this? Did we take out liquidity here? No. Did we take out liquidity here? No. Right? We actually held inside of this, right? And then we use the inside of this gap as a means to go higher. But still no liquidity taken. We left this liquidity. So we could have been looking for it to sell off right there, but then we got the change in momentum, right? Now is this area right here is our inverted fair value gap, our bullish fair value gap. Just like this is a fair value gap right here, right? We take out the high that we made right here. We take out this high right here. We take out this high right here. And then we make a new high right here. And then we come down into this and we get our candlesticks to confirm that we're going to go higher, right? So now that we're going higher, just like before, we look for the last high. We look for the last low. Just like we look for the last low, we look for the last high. So now we take out this high. This high got taken out by when we made this low. We pushed up. We started pushing higher here. Now is a fair value gap right here. We're going to come down. We set a higher up here. Now we come down into the fair value gap. We got our high, middle, and low, right? The candles sit, try to start buying right here. We start to push up. We do get a little fair value gap right here, but we don't react to it. There's two inverted fair value gaps. There's this one, and then there's this little one right here, because this one got inverted too. But this one happened overnight. So we couldn't get into that one. But the main point is we just went from bullish to now we bearish. And here's even another one right here. Lower time frame response. Bullish, bearish. You can even see this stuff on all the different time frames, right? What you see on the higher time frame, you should see on the lower time frame. What you see on the lower time frames, you'll likely see on the higher time frame. It's all like that's why that term they call fractal is basically everything happens, everything you see happen on the lower time frame will happen on the higher time frame. Everything happen on the higher time frame should happen on the lower time frame. It just may look different, right? Just may look a little different. So now we're leaving bullish over here. This is this week. We're leaving bullish. So now we're going to a bearish point of interest, and we need to see how we react to it. And that's basically what our next play is. Like, how do we react to the next bearish point of interest? Do we get in here this daily fair value gap and sell off because now we need to target these lows? Or do we get in here and we invert it and we get a fair value gap and we start to go higher? That's the simplest thing. And I want you to, like, if you study this right here and kind of use this lesson from today to understand it and go through it, I really, really think that you will understand it all together. And then I'll even add like this, there's a fair value gap right here. There's a fair value gap that's inside of here. Or there's an order block in here that's causing this move. Or there's some other things. I'm not going to talk about those right now, but these are like the main ones. If you can spot those, that's why it's moving, right? Then right here, it's the same thing, right? At these lows right here, in this area right here, the reason why this sold off, there's the same thing. There's an order block or there's a fair value gap that happened right around here that made this go lower, right? Then over here, there's some area of support that's bullish that caused this, right? And that could be an order block, that could be a fair value gap, that could be something, anything that you can think of that lines up with something that we talked about that's already to the left somewhere that it was targeting. Somewhere, it might not even be on the same time frame that you're looking at, but it's something over there that it just left this high to make this low from. And then finally, same thing over here that caused this, right? Something over here that did this. And it's when you see where the inverted fair value gap from, that's probably roughly around where it is because it's going to line up with it and overlap it some kind of way. And then all you're going to be doing from here is from this low, you waiting to see price come into this bearish point of interest. You get your sell set up from in here. You sell off. You look to take this low out. Then once you take this low out, you wait for price to make a new low. The new low made right here. Once we make our new low, if you want to try to take the buy, you take the buy. You try to, but no, you need to do this on the lower time frame. And if you take the buy, you know that once we get to our bearish point of interest, we need to be looking for our sales, right? Once we get in here, we see our confirmations, we take our sell, we look to take out this low. If we take out this low, you know we should be making a new low. We make our new low, you see, this, you look for your new short-term low. There's probably going to be a little small fair value gap inside of here too. I'm not going to add that one. But there's probably something right there, right around here to make this low to go even lower. And now finally, we're ready to turn around. Once we get to the point where we're ready to turn around, we should see a fair value gap right here. It should get inverted. And then it should trade above this high, or these highs. And we should get another fair value gap to the upside. That's bullish, like we got right here, that says, hey, We took out this high. If price come back inside of here, we should get a buy from here because now we turned around, we bullish. If we're bullish, right? If we're not bullish, then we'll invert this too, right? But so far, we're still saying, okay, cool. We just got to a bearish. We not ready to sell yet, right? And again, we either gonna sell or we gonna buy, right? When we got up here, we tried to sell off, but instead it stayed in here, hung around, and pushed up and took out the next high. And then it did the same thing. It came back. We got a bullish fair value gap right here that got inverted. We until the point we inverted, we trying to buy off of it right here. We can't take out this high we just made over here. And then instead, since we can't take out the high, orange line represents lower time frame. We trade through it on the lower time frame, and then we invert it. We use the one that we were supposed to buy from to sell from now, and now we start to go ahead and take out lows all over again. We did the same exact thing on NQ. It looked almost the same. High, low, there's a fair value gap. We sell off, make a new low. Same thing, repeated cycle. So I'm going to just send y'all this screenshot, this homework. Find this on every chart you can. It's a NAS chart for study. This ES chart for study. And you can literally overlay this same thing over last week's price action, and you'll see all of the candlesticks, right? Or you can use the chart from last week to get this. So that way you can study this. Right? Because all of this is just this whole move that we just did last week. And then a good thing to do is from this high, go in and find where this sold off from. These two sold off from. And then look and notice the lows, right? And then once we take these lows, notice where we made the lows at. Go on the chart and see what caused these lows, what caused these lows. I showed you most of them, but like just go back on the chart and make sure you see them yourself, right? Then go on the chart and find out what made these highs, what made this high, what made this high, right? And after you find out what made these highs and you find out what made these lows, find out why did we make these lows and why did we make this low and where was it going to target, right? And do that on in Q. And then repeat the cycle, right? Find out where this fair value gap is right here. And look and see why and where and when did it trade through it, like this candle right here. And see that it takes out this high, it takes out this high. And then go on the higher time frame and see the fair value gap that we should have sold off from right here and right here. And look, notice the level that it sell off, that it tries to sell off from. Notice that this is around the middle of the fair value gap from the higher time frame. This is around the low from the higher time frame fair value gap. And this area is around the high of the fair value gap that we were supposed to be selling from, that we didn't sell from initially. Then notice every time we make a fair value gap to the upside, after we made this low, we started to reverse, right? Notice that this fair value gap get traded into, we set these lows, we take out this high. We make a new fair value gap when we take out this high. So every time we take out a high, we should have a new fair value gap. Every time we take out a high, new fair value gap. Every time we take out a low, new fair value gap right here. We took out a low, there's a new fair value gap. If we don't have one, the probability of that area being one that we use to go lower is low. Like this low right here, even on the lower time frame, we sold from here, we took out this low, right? You see on the lower time frame, we made a fair value gap right here, right? On the lower time frame. We did make one, but this is on the lower time frame, and they actually use this to go higher. So this one is a good example of, you could have tried to sell from here, which I think I did actually. I think I tried to sell from here, but I actually noticed that we traded through it, right, to go start going higher. So I ended up taking a buy, and I took this buy up higher, knowing that we could be buying higher to come into the higher time frame to sell off again. Okay. You guys got it?
Oh
Oh
yeah.
yeah,
Hey,
that
the way
was
you
a
broke
great
it down
book.
right here make perfect sense. Yeah.
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 Okay. Okay.
So how long gonna take you to drop this video?
Probably like an hour. Cause
Okay, cool. I want to go over it tonight.
yeah,
And you put images of okay, the homework that you just did. Can you put the images in the chat too?
yeah,
Okay, cool. I want to print them out and look at them.
yeah. I will. I'm gonna also like just remember too in the group. Um, I always, if you're looking from your computer, I always put all the setups in here. And if you look for this hashtag future plays, you will see the
Okay.
one from the last session, right? And I'll put all of the setups plus the notes in the comments.
Okay, cool. Now, yeah. All right.
If for options, you just look for this hashtag option plays. If you don't see it pinned up here and you use this little search icon and you just type in future plays, it'll pull up all hold on. I gotta use the hashtag. We type in here future plays. What? Okay. So if you don't see it, you can go to one of the older ones and then just click on it and then click on the hashtag and it'll pull up all the hashtags that have this associated to it, future plays. And you can look at any of the ones that's from before. And again, in the comments, that's where all the details gonna be for each play. Like this NAS session, this was the play from Thursday, actually. This was the play from Thursday. All these is set up for that week. Same thing with the options. Oops. Interesting. That didn't come up for some reason. I gotta see what's going on with that, but that's supposed to come up. But anyway, they should be pinned in the feature right here. And then on the video too, I'll try to put everything in the I'll try to put the video up as soon as possible and go from there.
Okay, sound good.
All right.
All right. Some good information, man. Appreciate you.
Okay, y'all. Y'all have a
Thanks,
good one.
thanks, Corey. Yeah, have a
No.
good night.
Okay.
All right.
All right, cuz I'll catch you later.
Later.